Ladies and gentlemen, you need to brace yourself because what they have planned is going to absolutely devastate the economy. In today's video, we're going to go over some new news and some new economic indicators that are all signaling a major recession is happening right now, and even if it isn't happening right now, it is imminent. Because if you thought 2008 was bad, well, what's coming next could make 2008 look like child's play. Because everyone, this next week ahead is going to be absolutely crucial and critical for the markets and the economy. So everyone, this is going to be an action-packed episode. We've got so much to cover, so you're definitely not going to want to miss this. And I also want to thank today's video sponsor, Generative AI Solutions Corp. That's stock ticker AICOF, but more on them later. So everyone, without further ado, let's get straight into the news, the facts, and the data. So everyone, like I said, you need to brace yourself because what they have planned is going to absolutely devastate the economy. Do you remember what happened in 2008? Many people believe that another historic financial disaster is coming and it will absolutely devastate the US economy. Earlier this week, famed investor named Michael Burry has actually bet $1.6 billion that the stock market is going to crash. Now, we just need to clarify here because a lot of the mainstream media is getting this wrong and a lot of YouTube channels are getting this wrong. He's not actually betting $1.6 billion worth of his money. He's brought $1.6 billion worth of put options. But this still is a bearish bet. Of course, current conditions definitely resemble 2008 in so many ways. The residential housing market is so dead right now, and commercial real estate prices are plummeting at a very frightening pace. That's exactly right, everyone. But what I think will be different to 2008 is it won't be the residential real estate market that will cause a financial crisis. I think it's much more likely the commercial real estate market will cause a massive financial crisis. And we did just get news that Fed officials are making it quite clear they're not done strangling the economy yet. We recently got the minutes from the Federal Reserve July meeting that they're saying that still is huge risk for the upside of inflation, and I completely agree. I don't know if you've gone past your gas station in the US or here in Australia, we call it the petrol station. Gas and petrol prices are absolutely surging again. And remember, oil is a fuel for the economy. Gas and petrol is a fuel for the economy. So if those two input prices go up, well, guess what? Everything else is going to start going up again as well. But what else has been happening? Well, we've seen interest rates on bonds surge, and that's now causing mortgage rates to surge yet again, and they've recently hit a 22-year high. So this week, mortgage rates jumped above the 7% mark to the highest level that we've seen in more than 20 years. Mortgage rates surpassed 7% this week, hitting the highest level in more than 2 decades. Now, what could be a huge black swan event or a catalyst for the housing market is if the US banks do officially get downgraded, or if the US government gets another downgrade. This is going to cause yields on bonds to go up even higher, and it's going to cause interest rates on mortgages to go above 8%. And once they go above 8%, it simply won't make sense investing in real estate right now. Needless to say, high mortgage rates have been crippling the housing market in recent months. At the midpoint of this year, existing home sales were down a whopping 18.9% from the same time in 2022. There are certainly lots of people out there that would like to buy homes, but thanks to high mortgage rates, they've become simply unaffordable. That's exactly right, everyone. Maybe these house prices, people could somewhat afford them when interest rates were 2 or 3%, but house prices are still at record highs. Some areas they have fallen a fair bit, 10, 20%, but the average price is still close to record highs. But now with mortgage rates at 7%, in some cases even higher, the average middle-class American, or really anywhere around the world, this has been a global phenomenon, nobody can afford a house right now. According to Redfin, the percentage of teachers that can afford to buy a home close to school where they work has fallen to just 12%. So in my opinion, this is another great indicator that shows that the middle class cannot afford to buy a home. Now, there has been so much damage done to the economy already by these central banks, but these central banks are about to hold another summit and another, high-end meeting this week at Jackson Hole, and they may indicate more pain coming ahead. Because look at this, everyone, all eyes on Fed Chief Powell in Jackson Hole. And ECB Zaglad also speaks at Kansas City's Fed conference. Turkey, Iceland set to hike this week, and Sri Lanka set to cut. So don't worry when that information comes out, I'll definitely keep you updated, but this is a catalyst we have to watch for the markets this week. But Zero Hedge warns even if rates stay at current levels, we're headed for extreme pain. But the $1 trillion question is, does the Federal Reserve actually think that the economy can handle high interest rates? Well, unless the Fed changes course, the housing market is going to absolutely implode. And of course, commercial real estate market is already imploding. The chaos that is already transpiring is putting an enormous amount of strain on our financial institutions, and Fitch is already warning that we could see sweeping rating downgrades in the banking industry. So again, everyone, I don't know about you, but I feel like we're watching a repeat of 2008. Officials at the Fed can clearly see everything that is happening, but they just keep on insisting on making things even worse. So is this all by design, everyone? So I hope that you have been preparing for turbulent times because things are going to get crazy. But do you want to know the sad truth? 72% of Americans are living paycheck to paycheck and in huge financial trouble. For many Americans, payday can't come soon enough. As of June, 61% of adults are living paycheck to paycheck, according to a Lending Club report. In other words, they rely on those regular paychecks to meet essential living expenses with little to no money left over. And like I said earlier, almost 3/4, 72% of Americans say they aren't financially secure given their current financial standing, and more than a quarter said they would likely never be financially secure, according to a survey at Bankrate. So this is absolutely devastating, everyone. People are really living tough right now. And, according to Bidenomics, or the latest economics they're putting out there, they're saying, well, the economy must be doing great because the consumer's balance sheets are doing great. People are spending like crazy when the only reason why they're spending more is because the cost of everything is more. And yes, the unemployment rate is low, but that's because people are having to work 2 or 3 jobs just to keep up with the rising cost of living. And even though they are getting pay rises, it's not keeping up with inflation. But do you know what I've seen happen over the past 10 days? I've seen something happen that's quite inspiring and it's giving a lot of people hope. And what could have created this massive movement? Was it some famous celebrity? Was it some billionaire? Was it some politician? Was it some motivational speaker? No, it was just one hardworking class man that spoke the words that hit the hearts of millions of people. And this is, an unorthodox, guess you could say, economic indicator, but it reveals the truth of the struggles that everybody is facing right now. And it reveals the truth, the real state of the economy that we're in right now. So what is this new high-tech economic indicator? And what is this movement that's happening right now? And how does this show that people are really struggling, that Bidenomics isn't working? Well, it's this, everyone. But first, a quick word on today's video sponsor, Generative AI Solutions Corp. They are a company that's tapping into the generative AI boom that we're seeing across the markets right now. Now, a lot of people comparing this generative AI boom to the gold rush of the 1940s. But remember how during the gold rush, it was those who supplied the shovels and tools who actually had the most reward. Well, in today's world of AI, we have Generative AI Solutions Corp, who is doing something quite similar. And again, that's stock ticker AICOF. Generative AI Solutions Corp is at the forefront of the technological revolution, specializing in the development and application of artificial intelligence across diverse industries like education, healthcare, finance, and transportation. Imagine AI-powered advancements enhancing efficiency, accuracy, and decision-making across these sectors. That's exactly what this company is all about. Now let's draw a parallel to the gold rush. Just as those who sold shovels and tools to gold miners and profited immensely, well, guess what? Generative AI Solutions Corp is providing a tool that's crucial for the AI revolution. Their proprietary MAI cloud platform is like the modern day equivalent of those shovels, but instead of gold, it is enabling access to high performance computing power by top-notch NVIDIA H100 graphic processing units, GPUs. Consider this, they're breaking down the barriers to high performance computing, granting access precisely when and where it's needed. Now this is where the magic happens. Just as the suppliers of shovels and tools were essential to gold miners' success, Generative AI Solutions Corp is playing a pivotal role in the AI space by providing the computer power necessary for the AI applications to flourish. But that's not all. Security is a paramount concern, and they've got that covered as well. The MAI cloud platform is fortified with robust security measures to ensure data protection and intellectual property safeguarding, allowing organizations to harness the power of high performance computing without compromising sensitive information. And let's not forget their acquisition of Speak GPT, an AI-powered virtual assistant that's set to redefine how we interact with technology. But why should you care? Well, just like those who sold shovels during the gold rush period and profited immensely, investing in Generative AI Solutions Corp could potentially prove to be an exceptional opportunity. As AI continues to reshape industries and the way we work, the company's role in providing essential computing power is akin to selling the shovels in the gold rush. Because what have we seen lately? We've seen stocks like Nvidia surge 10x. Now consider this, an investment in AI COF could potentially be the next big opportunity. Not only are you potentially tapping into substantial financial growth, but you're also positioning yourself in a sector that's reshaping the future. So in conclusion, Generative AI Solutions Corp is not just pioneering the generative AI boom, they're equipping AI pioneers with the tools they need to thrive. Just as the gold rush supply struck gold by providing essential tools, this company is setting the stage for potential success. So embrace the opportunity, seize the moment, and consider doing your due diligence on AI COF, your chance to join the ranks of those who understand that sometimes selling the shovels is where the true gold lies. Now, of course, this presentation is for informational purposes only and should not be considered investment advice or recommendation to buy or sell any stock. Remember, investing in stocks, especially those in emerging industries like AI, carries inherent risk, and it's important to conduct your thorough due diligence and research, seek professional advice before making any investment decisions, and past performance of any company investment does not guarantee future results. Now everyone, back to the video. It was this song written by Oliver Anthony, but his real name is Chris, Rich Man North of Richmond. Now, what this song is about is about people, working overtime hours, they're grinding, they're trying to get ahead. But even though they're working overtime, or maybe they're working 2 or 3 jobs, they simply can't get ahead because pay is, BS, it's BS pay or, crap pay. They're not getting paid enough, and the cost of living is getting out of control, and they're pretty much a slave to the wage. No matter how much they work, no matter how much people grinding in today's economy, they can't get ahead, and people are sick and tired. But that's not all this song reveals. It reveals how much people's mental health is deteriorating, because when people are having to work 2 or 3 jobs just to get ahead, they have no hope. This is leading to a mental health crisis in the country. This is leading people to drown their sorrows away, like he said in this song he used to do with substance abuse. And the rich men north of Richmond is the rich politicians that just keep getting richer. They're rich donors, these lobbyists that are putting in legislation that benefit the 1%, but the 99% just keep getting poorer and poorer. And even if you do start to get ahead, maybe you do start getting a good paying job, maybe a 6-figure paid job for $100,000 to $200,000, etc. Well, then what this song also goes on about is then you're taxed to death. Then the government says, you know what? You're trying to get ahead in life. Did you go ahead and get in hundreds of thousands of dollars in debt to university to maybe become a doctor? You're trying to contribute to society. Well, now we're going to go ahead and take 40% of that. And if you don't pay, we'll throw you in prison. So again, everyone, you may be thinking, well, why are you talking about a song in a video about the economy? Well, because this song reveals the truth of the economy, and the reason why it's gone so viral is because people are really struggling out there, unlike the mainstream media is reporting. And this is a real world indicator that you can't get from the mainstream media or any textbook. But again, going back to this story, people, many of those people will lose their jobs during the next economic crisis, and because they don't have any sort of financial cushion to fall back on, many of them will also end up losing their homes. Delinquency rates are already starting to move higher, and that should deeply alarm all of us. But people, what we're experiencing is just the tip of the iceberg, and I'm not putting this video out there to try to bring you down, to try to scare you, to try to make you depressed. I'm putting out this video to warn you, to say you need to start preparing right now. And unlike these 72% of Americans are living paycheck to paycheck, you need to do whatever it takes to build a financial cushion so you can get through the next financial crisis. Because look what else people are having to do right now. Credit card balances have hit a record high above 1 trillion and suffer pronounced worsening amid surge in new delinquencies. So this goes hand in hand. People are struggling, they're living paycheck to paycheck, but now they're not just living paycheck to paycheck, they're having to use their credit cards just to, not go ahead and buy luxuries, go on a lavish holiday or buy a new car, etc. They're just simply using credit cards to keep up with the rising cost of living. But what is the Federal Reserve saying? Well, look, you know what? We're going to have a soft landing. There won't be any recession at all. all. Well, a famed investor has just come out and criticized the Fed and said they're kidding themselves on avoiding recession. Because look at this, everyone. Jeremy Grantham says the Fed is kidding itself on avoiding a recession. Fed almost guaranteed to be wrong, he tells David Rubenstein, and co-founder of GMO says US is entering a period of higher inflation. So everyone, I know you're thinking, well, okay, what does all this economic jargon and indicators mean for you in simple terms? Well, what this simply means is, everybody, the economy is not doing okay. Yes, unemployment is at record lows, but that's only because people can't keep up with the cost of living, so they're having to work 2 or 3 jobs just to try to get ahead. People are living paycheck to paycheck, they're putting everything on their credit cards, and it's only a matter of time before things really hit the fan. Consumers can no longer afford to buy things. We're going to see companies' earnings fall, and that could lead to a big correction in the stock market. But remember, there's always opportunities in every economic crisis. There are always those hidden gems. There still is stocks that could potentially outperform the market, just like today's video sponsor, Generative AI Solutions, that stock ticker AICOF. But everyone, what do you think about all of this? What do you think is really happening in the economy? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.